Trader, you're highly welcome to today's analysis. We'll be looking at the top 10 forex pairs to maximize your return. Now, why out of the many pairs on our trading platform, we decide to pick just 10 to trade to get a maximum return? One of the reasons is the spread. If you look at the list of instruments, the forex pairs on this trading platform, you will notice that there are some pairs that the spread is high. Take for instance, the EURUSD is 4. This is 4. USD Canadian dollar, USD Switzerland francs is 13. And you continue to look, you see some are 14. Euro Canadian dollar 14. Euro Switzerland francs, Australian dollar Canadian is 8. Australian dollar Switzerland francs is 8. Australian dollar Japanese yen is now changed, it's now 11. Then just move down. You begin to know, then look at euro. This particular pair has a higher spread. So this is one of the factors. Look at this other pair. It has also a higher spread. The impact of this high spread is that it's going to affect your equity, your capital, because this is the commission. This is the profit that your broker will get by offering you this quote, this value for doing this great work for you. So the benefit they will derive is this commission that they get through this spread. So in picking your forex pair, you look at that. And apart from that, we also look at the volatility, the price movement, the way the candlestick move. Like this pair now, you look at this price movement, the way it moves goes a long way in affecting your, these two, the way it moves goes a long way in affecting your trade. Let's look at this. All these are factors. You can see this particular pair, you can see how wide the spread is. So they slowed the movement of that particular instrument. That pair will also reduce, will also impact your profit or loss. So volatility plays a great role. Then now look at the last factor, which has to do with liquidity. The greater the number of participants that is trading that particular pair will go a long way in also impacting your profit or loss. So these three factors are the factors that we put into consideration in picking our top 10 forex pair to maximize your gain. So now we are going straight to take those pairs. Now the pairs which we'll be picking are the Australian dollar, Euro USD, Great Britain pounds, New Zealand, USD Canadian dollar, USD Switzerland francs, USD Japanese yen, let's see, USD Canadian dollar, then Australian dollar, Switzerland franc, Australian dollar, Canadian dollar, Australian dollar, Japanese yen, and we look at Canadian dollar, Switzerland franc, Canadian dollar, Japanese yen. So now let's pick these 10 pairs. So in picking these 10 pairs on your trading platform, we are looking at, I'm using MT5. So you click on that icon, you click on it, you will now do what? Click on this box so that you get rid of those pairs which you don't want. So now I'm going to click, so let me just click on all. I will now pick the ones I want. The ones I want, I'm going to check 1, 2, 3, 4, 5, 6, 7, and 8, and 10. These are the pairs which we want. So the rest will be deleted. We're now left with 10 pair. So now, how do we now trade this pair for maximum return? Now, for maximum return, trading this pair, we don't really need this particular one. So let's go back and get rid of that one. The last one is not added. So let me check. I have how many pair here already? I have 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. So the last pair is not added. So let me just get rid of that too. Okay. So we know it's not added. So let's go straight to that. So the first pair. Now we've picked our pair. The next thing we now need to do is to analyze it. And we are going to use an indicator called moving average. This moving average, so I will remove it so that you know how it's being added. So let's get rid of it. Now going straight to the moving average. We are going to use moving average to do what? To treat these pairs, so that it will be one of our technical analysis too. So you click on this particular icon here, click on it. When you click on it, you have the main chart. So you click on this sign. When you click on this sign, you have trend, you have oscillators, you have volumes, you have the Williams. So the indicator will be using its moving average, and the moving average falls under the trend indicator. Click on it. Then you have these parameters. This parameter is what we'll be using, but you can use a default parameters. So click save and go back to your chart. Now this is the way it works. Now when the moving average is pointing down like this, it's pointing down, you know you are selling. If it's pointing down and the candlestick are below it, that tells you have to sell. But if it's pointing up, it's pointing up like this, and the candlestick are above it, that means you are to buy. And apart from that, if the moving average is within, let's assume it's like this, and the candlestick are inside the moving average, that tells you that it's a range. So in that case, all you need to do is to look for the previous high and the previous low. So those are the areas where you will now take the trade. So we've now seen how you have to use moving average to get your signal. Now the next step is using what we call top-down analysis to know where you have to take your trade. You've used the moving average to know that this is a trend, this is a trending market, it's a ranging market. So the next thing we have to do is to use top-down analysis. What is top-down analysis? It's to analyze the market from the higher time frame so that you can get the big picture down to the lower time frame. You look at what is happening at the month, at the week, at the daily time frame, 4-hour time frame, 1-hour time frame, 30 minutes time frame. So when you do that, you will be able to get the real picture and where to take the trade. So now for this particular pair, let's go straight to the month. The month, let's see what is happening at the month, and let's see the position of the moving average. So now for this particular pair now and this chart, the moving average is yet to appear. Just hold on and let's watch how the moving average will come up. Okay, now I can see the moving average now. This is the moving average. The moving average is pointing down, which tells us that what we are to sell. Now the next thing is to go to a lower time frame, which is this. Now this you can see is sideways, although the candlestick is below A, which tells us we are to sell. Are we to sell here? The answer is no. We need to look for a particular area where the risks will be that minimum. I'll go straight to the daily. Now this daily is a good point where we are to sell. We've already drawn the level where we look at to sell. This particular level is where we are going to sell. So let me zoom it a little bit. Now you cannot just sell immediately because of why? You need to at least get the moving average closer to it. So that means you need to move the closer time frame, a lower time frame. Let's check the 4 hour to see if, okay, now this 4 hour is an ideal point for us to take a trade. So I can decide to like, okay, let me bring it this way. Now this is what you're going to do. At this point, you will now go and wait for this candle to do what? To close. When this candle closes and give you what? A bearish candle, a red candle, that is when you will now take the trade. The trade to do what? To sell. You are selling. Before you will sell, you need to calculate what? Your risk. This is where your stop loss will be. So if, for instance, you want to sell here, although the candle has not closed, bearish candle has not appeared, if you sell here, this is what you will risk in a trade, and this is what will be your gain. So if you can raise that, this risk to reward is 1-to-1, and this reward is that it's not that good, because if you take 10 trade, you're working with risk reward of 1-to-1, and you lose like 5 trade, you win 5 trade, automatically you are not in profit. So you need to work with a risk reward of maybe 1-to-2, 1-to-1.5. Let your reward be higher than your risks. So that is on that. Now let's check the second pair, EURUSD. Now I've already told you how to do what? To take the trade. So on the month, let's see what is happening there. We'll wait a little bit to see our moving average. We're already seeing that the candlestick is bearish. So let's see if the moving average is telling us to sell. Now take note of this. Now when you look at the moving average and you compare the chart, just hold on, this MT5 is that slow. So when you compare the two, I discover that we're waiting for the moving average to really come up. Please, I want you to like this video if you are getting value from it. Smash that like button, and apart from that, you do us great help by doing what? By subscribing to this channel, because on this channel I personally will be giving you top 10 analysis on different pair, which will help to like reduce your learning curve and also do what? Increase your profitability in your trading career. Now while we are waiting for the moving average to appear, let's just check the week. The week, we've not really seen it. Okay, let's check the daily. Okay, good. Now the daily, you can see the daily is telling us we have to do what? We have to sell. So if we are to sell, the next thing we have to do is to look for a good area. If you sell here, let's assume you decide to sell here now, where you have to put your stop loss is here or here. That is for moving. That's for EURUSD. So now let's check the 4 hour. 4 hour is telling us we are to do what? Buy. So if you are buying, this is where you have to put your stop loss. So you are waiting for the market to come closer. If you come closer and it cannot break this zone, then you will do what? You buy, because the market will go up. Let me check the month and see what is really. I don't know why the moving average has not really appeared here. Taking time for it to appear. Please, on the comment section, I want you to comment. One, this is what you are going to do. If you really understand how to trade the moving average in a simple way, the way I've explained, say yes, I understand it now. But if you don't understand, also say I don't really understand. I will do a video, a proper video on how to trade moving average based on the number of people that said they don't understand. So let's move on. For the 4 hour, I've already seen 4 hour. I've already told you, if you are to buy, wait for the market to come closer to this level before you can think of buying. Then the fourth pair is great between pounds USD. Now on this pair, you can see it's pointing down. The moving average is pointing down, while the candlestick are just within. So this is where we look at. One, the moving average is telling us to do what? To sell. Now let me see. Let's start with the month candlestick. Okay, the month candlestick. We are looking at one. We have to do what? The trend is already an uptrend. So we are looking at this level for us to buy. Get now. Then let's check the weekly. The weekly is telling us we have to sell. You can see the moving average. The moving average is telling us we have to buy at this area. And let's check the daily. The daily, let's see what. Okay, this is telling us to do what? Sell. So you will now decide where you are going to take your trade. So if we are selling, this particular area is also a key zone area. This area is also a key zone area for us to do what? If you sell here, this is where you have to put your stop loss. So we are looking at if the market will come down. Let me just check the 1 hour. This top-down analysis we are doing to see what is going to happen. So here is our area to do what? To place our stop loss. That is the zone. So we are looking at placing our stop loss here. So if you are selling here, you are targeting this area or this area. So watch out to see the next, because the moving average is telling us what? That we are to sell. That is a signal. And let's move on to New Zealand, United States dollar. On the monthly, we are here to see what the moving average has to tell us here. So let's check the weekly. The weekly is telling us we have to do what? We have to sell, giving us the signal of sell. Now, if you have to follow the week, you will do what? Allow the market to come up closer to the moving average before you think of either taking that signal. Then the daily is also telling us to sell. So this zone is where you have to consider to sell. So allow the market to come closer to that zone before you think of selling. But if you can risk this particular move from here and placing your stop loss here, it's not your risk. You calculate it and know what you want to. But if you can risk it, fine and good. That you enter. You also calculate your risk to reward. And let's check the 4 hour. The 4 hour, I see is well defined now that we are to do what? Sell. And the zone we've drawn is a good area to place our stop loss. So I've already shown you what you have to do when it comes to this particular pair. Now, the most important thing that we need to put into consideration is patience. Most traders are not patient enough, and that is a very common mistake that most of us emotionally find it very difficult to wait for the market to play out. We want to do what? dictate to the market. No. If you want to succeed in forex trading, you need to do what? Be patient enough. So let's go on to USD Canadian dollar. I don't want this video to be that long, but I know it to be long. The most important thing is for you to get value while you are watching this video. So now looking at this pair, you can see it's already on an uptrend, but it has gotten to the previous high. It's at the previous high. Yeah? So at this previous high, something might happen. The market might come down. So for those of us who are looking at it, you might be looking at put your stop loss above here. Let's see if the market will retrace back to that level. So now let's check the weekly. The weekly is on an uptrend. You can see that the moving average is pointing up while the candlestick are above it, which tells us we have to buy. Let's go straight to the daily. The daily is also telling us what? It's telling us we have to buy. And if we are to buy, we wait for the candle to do what? To retrace to that zone. Let's check the 4 hour. Yeah, the 4 hour is very close. So this is zone where we are considering. You can look at this or this. So we are looking if the market can retrace. You can see the moving average. The moving average has not been able to cross the price action, which is a candlestick. This is a candlestick. It has not been able to cross it. So if it has not crossed it, that means we'll be looking at the signal it's giving us, which is a buy signal. So that is for the USD Canadian dollar. Now let's check USD Switzerland francs. USD Switzerland francs. Let's check the month. If it will give us a signal to either buy or sell. In trading, we have two actions we take. You either buy or you sell. So if you are going to buy, you look at the level where you have to buy. Now looking at the monthly candlestick is telling us that what you have to buy. Now the level of rejection, you might consider this place. Although the moving average has not given us anything here because of the platform we are using. It's taking time to load. So let's check the weekly. The weekly is telling us to sell. So the level where we have to sell is here. You can see the moving average is not that pronounced. There's it. So and it's above. Since it's above the candlestick, the price action, which tells us we have to sell. So let's check the daily and see what is happening. So now the daily is telling us we have to do what? We have to buy at this level. Then if it retraces up, we are looking to sell at this level. You've seen the reason. The moving average is pointing upward. Why? The candlestick, the price action is above it. So that is for Switzerland francs. And let's check Switzerland Japanese yen. USD Japanese yen. So now for the month, you can see it's an uptrend. It's an uptrend. And the week is a downtrend. So we are looking at this level. We are looking at year and year to do what? To sell. So that's where we are looking at. Now let's check the daily. The daily, okay. This daily is telling us we are buying. Now let's check the 4 hour to get a good level. So it's a little bit confusing. So you just have to stay put. If you are to sell, look at this level here and then here at the area where you are to sell. You can see that the moving average is crossing over the price action, which is a candlestick. That is going above it to give you a sell signal. Now let's move on to Australian Canadian dollar. Australian dollar, Canadian dollar. Now for the month, let's see what is happening at the month. The month is already on an uptrend. So it's already on an uptrend. You can see the trend line. If I should draw my trend line here, you agree with me that the market is an uptrend. It's an uptrend. So there might be a pullback. Okay, the moving average has appeared, telling us that the candlestick is above it. So there might be a pullback to touch the trend line before going up. So for the month, we are looking at doing what? Buying. So I'll just fix a line where we might want to like buy. If I fix my line here, let's see if the market is coming back to test this area or coming back to test this area. So these are the area I'm looking at if we are to do what? To buy. Now let's look at the week and see what the week holds. Now the week, the buyer is really taking the market to the upside. You can see the buyer is taking the market to the upside, while the moving average is below what? The price action, which tells us we are to buy. Now if we go straight to the daily, the moving average is doing what? Trying to like, it's pointing up. It tells us that we are to buy. But the candlestick, the candlestick is below the it, which means there's a contradiction. So this is what you will now do. You will now wait for the market to come closer to this area. If you come closer to this area, then you now think of what? Buying. But if it breaks this moving average to the upside, that is, the candlestick are now above it, then you look out for a very perfect area for your entry. So we'll go straight to 4 hour to see what is happening at the 4 hour. You can see the 4 hour that the price action is about to move to the upside of the moving average. Now let me check the 1 hour to see how it's playing out there. Now you can see it has played out there where. So the level we'll look at, let's see if the market can come back and test here, or we just hold on at that level. So that is for your what? For your Australian dollar, Canadian dollar. Now let's look at the Australian dollar, Switzerland, France. Australian dollar, Switzerland, France. So at the month, you are saying, okay, you are saying, let me say, okay, an uptrend here, an uptrend. Let's just hold, okay, it's a downtrend, sorry, it's a downtrend. You can see the trend is a downtrend. So it's a downtrend, just looking at the lower high, the trend. The trend is telling us it's a downtrend. Okay, fine. The moving average has even appeared to tell us that it's a downtrend. You can see lower high and lower low. So these are just your lower lows, I guess, and lower high. So these are your lower high, and this is a trend to tell you that what is going down. I can take here to be your lower low. You get that? So this is a downtrend. So with that, on the month, go straight to the lower time frame, which is the weekly. Weekly has given us the signal of a downtrend. The moving average is below it. So we are looking at this level for first take profit. Then it might go beyond that. So let's check the daily. Now the daily, let's see if the market can retrace to this level. So here I will now fix my line. I'm going to fix my line here to see how it plays out. Fix your line and wait if the market can retrace to that level. Retrace to that level before you think of selling. If you cannot break it, you sell so that it will reduce your risks. So that is your Australian dollar versus Switzerland francs. So let's see the last pair we'll be looking at is the Australian dollar, Japanese yen. Let's see what is happening at the moment. Please, if you've not subscribed to this channel, please do so. And please, I want you to share this video, because this video is going to help a lot of traders who are finding it very difficult to analyze the market, to read the chart, to place their stop loss, to calculate their risk reward. This video is going to help a lot of traders out there. So I want you to share this video, and apart from that, I want you to smash that like button. Now you can smash the like button. Then if you don't like the content, fine and good. Every individual is entitled to his or her own opinion. You can also click on the that is, if you like, you smash the like button. If you don't like, you smash the opposite. Then you give me the reason in the comment section why you don't like this content, so that it will help me to improve in my next content, in my next video. Then any topic you don't understand, be it the moving average, be it the drawing of resistance or support, you can also comment. Be the top-down analysis, because in this video I've treated moving average, I've treated top-down analysis, I've also talked about how you have to calculate your risk reward. These are topics that I'm treating all in one video. So you can just ask in the comment section a topic that you want me to really go in depth, and I will do a video on that based on your request. Now, on this particular pair, Australian dollar, Japanese yen, you can see that the moving average is what pointing to the upside. The candlestick are what above the moving average, which tells us that we are to buy. Then going straight to the weekly, the moving average is inside. It's inside the candlestick. So yeah, this is what you wanna do. You draw your line. You see if the market will do what? Will come closer to this level. That's the level where we look at for a reversal. So this height would play out. So now you are going to calculate your risks. This way you have to place your stop loss. So, and you are looking at if the market can do what? Go up, because you are looking at buying. So for you to buy, go to a lower time frame again, because that means this level is really active. The market has given your first touch, your second touch, your third touch. So fine and good. Let's see if it gives us a fourth touch. But naturally, the market, the way it behaves, you give first, second, and third, and then it moves to the upside or to the downside. You can see it has created a higher high, which tells us that the market is on an uptrend move. So you will exercise some patience to see if there will be a second pull back for you to enter your trade. You can go to 4 hour. Let's see if that level is still active. So let's see. Where I explain, you can see the touch of the market, different touch of the market. So that level is still intact. So now wait at the market there. The moving average is within the candlestick, which is like trying to confuse a lot of trader. So but for you, that level that I've drawn is a good watch. So these are our top 10 pair which we'll be looking at today, being the 1st of November 2024. If you've derived any value from this video, please like this video, share this video, and subscribe to the channel. because I'll be posting content like this, and we also do video based on your request. My name still remains Asogwa Happiness. I'm here to serve you. I'm here to ensure that you master the move of the market, and you to trade with confidence and to make money in Forex as a trader. God bless you. To meet again. Please don't forget to check out the description. If you want to get in touch with me, there's a link there. If you want to get in contact with me on Telegram, on WhatsApp, there's a link there. Just click on it. It will take you to any of these links, and you will get in touch with me. Remain blessed till we meet again. Bye for now.